if you were running a long short fund, or if you had a choice to make a large cash call on a personal account, would you do that currently?
No, in fact, I'm doing right now just the opposite. In that, whatever cash is there in terms
Mhm.
of, on the balance sheet of the company, if you will, very eager to get it invested. And the utmost, obviously, you have to keep some working capital and all that, but otherwise, eager to get that invested. But that's always the case with us. We never take cash calls. Cash in the pocket does feel like, I know there's a very famous saying, cash doesn't burn a hole in the pocket, but to me it always feels like it's burning a hole in the pocket, and I never like to keep cash in the pocket or in the bank.
So that's because of policy continuity of your firm per se. But would you believe that there could be substantial downsides for Indian markets, or you ruling that out? Surely you're taking some hypothesis when you are getting
So
your money invested.
see, in equity markets, first of all, what is substantial downside, right, is a question.
Okay,
Now,
let me say northwards of 10%.
at any given point in time in the market
It
over
is
the last
possible.
30 years, 40 years, if you had asked me the question, or and any time, you equity markets by definition, I mean, 10% is always on the cards.
Come
Yeah,
on,
not in a
Prashant. My
single,
viewers are
not
watching
in
for
a,
some direction from you. You
not
manage
in a
such large
single
noodles of money. Tell me
not in
something.
no, no, not in a single day, but in any given month, 10% is possible. The longer the time horizon, if you ask me over the next 10 years, can the
Okay,
market be down 10%? Highly unlikely.
sure.
Can over there have been hardly any instances of, there have been some, but like from peak of 92 to bottom of 2003, the markets would have been down, more than 25%, if I recollect correctly. But is that like the, forget even base case, that's like a, I don't know what kind of a sigma, even 345. On an expectation basis, our expectation always is that the market should deliver over any reasonable period of time, in line with nominal GDP growth.
Hmm.
And you, over a shorter time period, nobody has any better clue. So then over a shorter time period as well, the best ex ante expectation is to expect uh, low double digit, in line with Indian nominal GDP, rupee growth, or return from the market.
Okay. Okay. Let me try and rephrase. Do you reckon we had a bit of a pullback from those lows of 15,300, 400 odd at current valuations, circa
Yes.
17,500, 18,000? Do you
Yes.
reckon earnings catch up will make valuations look reasonable, or GDP growth will make the market cap to GDP math look reasonable in the next 12 months, or will the markets have to kind of move sideways and wait for a considerable period of time? What's the analysis there?
So, so just to complete the previous answer as well,
Sorry.
just to complete the previous answer as well, see, the risk is higher at this time, no doubt. So the expected return doesn't change, which is in line with nominal GDP growth. Uh, and that would mean, low double digit return going forward. But the risk is higher, and simply the risk is higher. Risk is always there, but risk, if you want to take, I use very simply a very um you know objective measure of risk, which is look at the VIX index. VIX index year to date is up 58%. Just yesterday went up 14%. Not surprising if Nasdaq goes down 5%. VIX index up double digits. Not surprising. The fact that VIX is higher and has, of late also spiked up. So obviously, whenever VIX is higher, the risk is, market is saying the risk, in market man's perspective, the risk is higher. But risk higher does not necessarily mean that the downside risk is higher. Both risks are higher, downside risk as well as upside risk is higher, and the expected outcome to us is still that um, nominal GDP growth linked return. Now, to your following question, I'm sorry, Neeraj, can you just remind me what was the following
Yeah.
question?
Now I was just asking, will the markets have
Oh
to
yeah,
be
yeah. Sorry.
sideways for the valuation catch up to take place, or do you think
Certainly.
earnings or growth will gallop?
See, if we look at the market right now, it is in absolute India, relative to India only. Once, if we forget the global markets, because valuation, either you're talking about, I'm not a believer of absolute, anything like absolute value, but relative valuation. you have to look at. Obviously, when people who say absolute, that also is linked to what are the interest rates. You can't have all else equal. You can't have the same. And when people talk about valuation, they're talking about P multiples. You can't have the same P multiple expectation when interest rates are 15% and when interest rates are 4%. Okay,
True.
all else equal. When interest rates are 4%, multiples have to be higher. So when people compare multiples, let's say globally over the last 40 years, that's not a, or 50 years, that's not a fair comparison because the current interest rates are far lower than the average interest rates over this time. But coming to India multiple relative to its own self, if you look at right now, we are not much different from where we have been on average over the last 8 years, Neeraj, in terms of P multiple. Again, if we keep, let's say, take an average of last 30 years, then we are about 20% higher. But again, you can't, we are talking in different interest rate regimes. Over the last 8 years, or at least the Modi era multiple,
Mhm.
we are, at more or less at par with the Modi era multiple, which has been a 15-20% premium to the very longer term multiple. Relative to the global market, particularly global emerging markets, yes, India is towards the higher end at this time, but it is more because China has gone down so much. China has re-rated over the last 2-3 years because of everything that we already know and
Yeah.
not need to rehash. But and China was 35 to 40%, closer to 40%, I think, a couple of years ago. So if the largest component derates by as much as it has derated, the overall gem multiple has gone down. India multiple hasn't necessarily gone up, but the
Relative.
relative difference has increased. And also remember, Russia has gone to zero over this time. So Russia has so gone out of the index. That doesn't play much of a role because Russia, anyways, was a far lower multiple within the gem index.